I think you're in the folder that most people use right now, which is the Subto hybrid documents folder. If you're purchasing property subject to, this is the folder you're in all the time. This is the folder that I would be in all the time if I didn't have them already slapped onto my Trello board for me to have quick access to them. This is it, guys. So let's go through exactly what's in this folder and how you can use these documents. All right. So right off the bat, I will go into this optional because it's the first one that's here. I wrote optional on this because I've rarely seen people use this document. It is a due on sale addendum. It's basically an addendum outlining that if the due on sale clause is invoked, in other words, you've received the dreaded due on sale letter, this is how you will handle it. In this specific example, it says that you will do a lease option agreement where the lease payment is the exact payment you were paying before, and the option to buy when you execute on your purchase is the balance of the existing loan that was already in place. So you can do that. That's not your remedy every time. Sometimes it's going to be an executory contract. Sometimes it's just going to be deeding the seller back on and not doing anything. I've seen people do all kinds of different things. So this is just one of many ways to remedy the due on sale being invoked. But very rarely do you use it, so it's an optional document. You probably will never need it unless you have a very stickler seller. And in that case, just tread lightly because sometimes these transactions aren't right for everyone. So don't push a seller into something they're not comfortable with. And this optional addendum is not going to convince somebody to do it more than anything else. So the next is the purchase contract. This is the current version of the creative purchase contract. This gets updated, I would say probably annually. We update this contract, or when we see the need, we update sections of the contract. So you may see this exact contract, but sections of it have been updated. Do not be fooled by any other versions that are out there. This is the most up-to-date version. I promise you that. If someone else has created a separate one, there's a reason mine doesn't look like theirs. So going into that, you'll have your property address, property APN, also known as PIN, or just parcel number or identification number in some states. These property APN or PIN or whatever you want to call it and legal descriptions can be found on the county assessor website. Whatever county the property exists in, you can look up the county assessor information and you can find that specific information here. If you cannot find it, you can put to be provided by escrow agent, but make sure you actually attach a copy of it to this contract for your final folder, or your TC does, because you want this to be complete and you want those to be filled in. The next section here is talking about the purchase price of the property. If you're purchasing a property subject to, which all of these, everybody who's in here that's looking at this folder, that's what you're looking to do. Typically this says TBD. To be determined, because the balance of the existing underlying loan today may not be the balance it is when you close on this property, and all of these numbers are fluid, right? They could be changing. So TBD, and then you break it down between earnest money deposit, existing first mortgage, second mortgage, a new loan, seller carryback, whatever you have involved on this transaction. And then cash at close of escrow is going to be whatever you're going to be giving to the seller at close of escrow. Sometimes there's some other additional things that people include in this. So there is another section down below that I'll talk about in a second that has a specific section talking about what the seller is getting out of this cash at close of escrow. But don't be too worried about it. If this number is the same as what it is down below, that's okay. Close of escrow, you can put days after effective date. An effective date is the date that this is signed. Also, quick note, earnest money deposits, guys. State where the earnest money is going at close of escrow. So if you put $1,000 here, I would put an asterisk that says EMD to be applied towards closing costs. If it's not to be applied towards closing costs, to be refunded to XYZ LLC at COE. You know, write that in there, highlight it, do whatever you need to do. Make sure that it is pertinent to the transaction, because lately, guys, I've been seeing so many people not say where their EMD is going. And because they don't say where the EMD is being applied, it creates a lot of confusion at closing. And sometimes you'll have a seller that's like, no, that's in addition to the money I was going to get. And on the contract, it's not really outlined. So I'm not going to go too far into that, but just a quick tidbit for you guys. Closing escrow agent or closing attorney, you should write the name of the person you're working with, the company name, their phone number, email, address, all of that. Any HOAs or other associations attached to the property, seller's name, it should be as it's listed on title. The seller's name should reflect here as it's listed on title. For example, if you have a Robert, but he goes by Dick, don't write Dick Smith, write Robert Smith. That's how it's written on his title. So write how it's written on title. Buyer's name, typically it's going to be an LLC. Sometimes it's not. This is an editable document. You guys can edit it. Address, telephone number, email. Inspection period typically is 10 days, 10 calendar days, but you can do whatever you want. You can put however many days. And then sometimes you can put a little asterisk and do business days. I like doing that because then it gives you holidays and weekends are not included in that count. Escrow fees, policy fees, HOA fees, transfer tax, which you won't have in every state. You can outline who's paying what. In a typical transaction, it's split 50-50. In a creative transaction, many times the buyer is paying for all of it. That's how I usually see it. Personal property to be included if someone's leaving behind personal items. You don't want them to come back later and state that those personal items were not to stay in the property. You want to make sure that everything is written out. If it needs to be itemized, itemize it and then reference the itemized list here in an addendum. If it's just going to be a hot tub, just state that it's a hot tub, right? The hot tub is staying. That's it. Then in every subject to or hybrid transaction, you need to put in a subject to addendum and the seller acknowledgements. Every single one. This is not an exception. Every subject to transaction, every subject to hybrid transaction needs a subject to addendum and a seller acknowledgements addendum. I'll go over those in just a second. They need to be signed at the signing of this contract. Do not try and throw them in at the end. That is not nice. I promise you, it's not nice. And it doesn't do you any favors or anyone else if you don't disclose all of that information on those documents to your seller. They are based off of Pace's experience with sellers and the things they have said. And I promise you, your sellers will try and say the same things. Remember, buyers are liars and sellers are worse. So don't give them any opportunity to throw you under the bus. This is that section I talked about a minute ago that talks about the net to the seller. You don't have to check this off, but if you did check it off, you're just going to say the exact amount that's going to be given to the seller out of the cash at close of escrow you outlined above. This is the section where we're talking about liens and encumbrances. You'll state the lien holder's name and the approximate balance of that loan in this section. Only state the liens you're taking over. This is where your point of negotiation comes from. If additional liens or judgments come up later, you're saying, nope, reference section 1.14. I only said that I'd be taking over this lien. If there's additional ones, we need to negotiate how those are being handled. If there's a reinstatement, this section talks about the reinstatement. So that's if someone's in foreclosure, and you want to reinstate their loan, not pay off, reinstate their loan. Then you'll outline what the amount of that reinstatement should not go over if you're to purchase this property. Then you'll check this box that says this is a wraparound financing transaction. Yes, this is a wraparound financing transaction. It is what it is. Sometimes people don't call it that. It's just subject to whatever. It's a wraparound financing transaction. You're either going to be mirroring the existing loan, which is this first box. You're just going to be taking over the payments on the existing loan, or you're going to have a hybrid where you're going to be mirroring the existing loan plus X amount of dollars. You're going to be paying X amount of dollars in additional principal. The interest rate for that additional principal and that monthly payment for the additional principal are going to be stated in this indented section. Then this monthly payment start date, that's for the total monthly payment of everything, is to start on usually the next month, right after you close escrow, next month. The maturity date can have a specific date on it if it's got a balloon, or it can be same as the existing loan, or it can be same as the existing loan and the additional principal has a balloon date. Whatever you negotiate with your seller, the monthly payment will be made directly to the lender, or I'm going to fix this, servicing agent, or you can outline a servicing agent. Why is that doing that? There we go. You can outline a servicing agent's name here. And that's very common for people to use servicers, especially in a hybrid scenario. If there is a seller carryback, but not subject to existing loans, in other words, nothing above applied. So if you had just a seller carryback, you wouldn't check any of these boxes. You wouldn't check that's not wraparound financing. It's not mirroring the existing loan. It's no hybrid. You go straight down to seller carryback and you'd check that off. And you'd be putting in the total amount and the interest rate and the monthly payment for the seller carryback. If there's a listing agent, you can name them and put their information in here. In this other section, you can state if there's going to be a post-possession. I don't suggest you do that, but if there's going to be a post-possession, you can outline that here. If you're going to be paying the agent directly or outside of closing or through escrow, you can state what you're paying them specifically. Meanwhile, you'll probably need a separate agreement with them, whether it's a general referral fee agreement or something else. You'll need an agreement with them. Make sure you always have agreements with everyone that is going to get paid on your transaction. And then occupancy. There are no parties in occupancy of the property unless otherwise specified. And you have this very small section to state if otherwise specified. It's a very small section, but whatever. Don't suggest doing that, but it is what it is. You can outline here a seller to get a 2-week post-possession and keep the property in its existing condition and hold insurance, yada, yada, whatever. Or if the property is currently leased, then you're going to check this box and say that you understand that it's being leased. If you or someone within your company that is an employee of yours or a partner on your entity holds a real estate license in the state where the property is located, you must disclose that. And I know you know that as a realtor. So you will check holds a real estate license. If you don't, then you check do not hold right there. All of these other disclosures are pretty standard. They're based off of Arizona, so they won't be exactly perfect for every state. Once again, you can have your closing attorney or somebody review it for you to make sure it's appropriate for the state that you're in and it's got the disclosures that they would like to see. The important part in the miscellaneous section is the section about assignment. This one specifically states that you may assign the contract. So if you're a wholesaler or if you're somebody who's wanting to be able to assign this to a different LLC, you want this 14.3 section in whatever contract you use. And if you would like to file a memorandum against the property, I won't go into what memorandum means, but if you would like to file one against the property, show your notice of interest publicly, you will want to make sure that it's stated somewhere in your contract that you can file a memorandum against the property and that the seller has agreed by initialing and signing this contract that you can file a memorandum. There is this small section at the bottom that can stay in or it can be removed. The reason I keep it in everyone's contract, and I didn't call this a Colorado specific contract, is because I think it's okay and probably beneficial for people to have a 3 business day time period to think about whether they want to do this transaction. These are non-traditional transactions. Sometimes people will feel a little bit weird. If you say you're giving them a few days to think on it without opening escrow, it's a good idea. Not every state requires this. Not every transaction type requires this. This came from some, I don't know if you'd call it legislation, but a ruling or a consequence out of Colorado that was against some equity purchasers, which are subject to buyers. So they are equity purchasers in Colorado. If you are purchasing a property subject to an existing loan, it's considered an equity purchaser. And specifically, if you're an equity purchaser for people who are in foreclosure, you must have this specific disclosure. This is why it's important to have these things reviewed by a local closing attorney, is because the only reason I knew this is because of the court case that came out about it. But you want to make sure that if you do give a seller 3 days, you don't open escrow until that time period is up because you don't want to waste anybody's time. So if you are going to keep this section in here, you want to make sure that you give enough time and you give a specific date and time at which when it can be canceled. In Colorado, you also need this second document that has to be given to the seller that specifically states all the information they need, and they can just sign it and give it to you saying they canceled. You can keep this in for all of your contracts, and it's not going to hurt you. In my opinion, I feel like it helps you but it's not required everywhere. This was specifically only there because of something that happened in Colorado for equity purchasers purchasing properties from people in pre-foreclosure. So not even just standard, like if somebody was current on their loan and let you take it over subject to, this disclosure wasn't required. But if you were purchasing from somebody who was in pre-foreclosure, this is someone who could be easily coerced because of their distressed situation. So these are times when disclosures are even more important. They're important, but they're even more important when someone is in a distressed situation like a pre-foreclosure. Now let's go back. The next one is our seller acknowledgements. This is where these disclosures that are very specific to the firsthand interactions that we've had with sellers over the years have come from. So before I send these to a seller, I always like to say, just so you know, we have some disclosures. Some of them may seem silly. Remember, this is a real estate transaction and we can change the verbiage on anything. If anything makes you feel uncomfortable, just remember these contracts were written by our attorneys for us. And we always suggest that you have somebody professional on your side review everything on your behalf. So just know everything is adjustable. And there's some goofy things like you're not drunk while you're purchasing this or while you're signing this contract, right? And it kind of lightens the mood a little bit before you send all of these daunting disclosures over. This is where newbies who are new investors break down. They don't want to talk about the hard stuff. They don't want to talk about these things that I'm going to talk about here with you right now. But this is basically how I go through it with a seller if I were to talk to a seller about it. You no longer own the property. And so you're going to tell me that you are the owner of the property right now and you can give ownership. So if we purchase the property from you, you're no longer going to own the property. So can you give ownership of this property to me? Are you the beneficial owner? Yes, I am. You understand the contract terms and you're not confused. If you are confused, let's talk about them right now. What are you confused about? You understand the relationships of all parties, right? Any joint venture agreements, any consultants, any other business relationships, that's all been disclosed to you, right? Yes. You understand that the sales price may be less than fair market value, but in light of the present circumstances, they believe it's in their best interest, even at the discount. This one, sometimes I put not applicable because many times, guys, you're not purchasing this for under market value. You could completely delete this because remember, these are Word documents, or you could just put not applicable. You could say, hey, I use these contracts for all kinds of purchases. This one doesn't apply to your transaction. They're giving up equity in their property. I just said it a minute ago, equity purchasers. They are giving up their equity. So whatever equity they would have gained, yes, their loan's staying in place, but that equity is yours. This is a binding contract. The buyer is a wholesale buyer purchasing for investment. Even if you're not a wholesaler, I think it's essential for you to just say you're purchasing for investment because you could end up wholesaling it. So even if you're like, I'm not a wholesaler, who cares? You're a wholesale buyer. You suggest that they seek legal advice. You're not their your independent legal advice, so they need to seek their own independent legal advice as well as financial advice. They feel it's been fairly negotiated. The property is not listed with a real estate broker unless the contract states otherwise. No precluding physical or mental conditions that prevent them from being able to sign this contract. They're not under the influence. You're not drinking, taking drugs before you sign this contract. They understand the complete agreement that is in front of them, and they have no unresolved issues. They're not under duress, and they acknowledge all of the disclosures. So that's pretty simple how you go through those. The subject to addendum in the first section talks about due on sale. The loans are not getting paid off, and your existing loan has a due on sale clause associated with it. Hopefully you've talked about due on sale before you get to this addendum. But if you get to this addendum, this section is a perfect place to talk about due on sale. And you're going to be basically telling them, yes, the lender has the ability to invoke the due on sale clause. Every single loan that I've seen has it. And it basically says, we don't want you to transfer the deed. And if you do, that means you sold it. And so you need to pay us off. We have ways to remedy that. We add the seller back onto title and we prepare a lease option, an executory, whatever we need to do for that specific state. And then we move forward. There are a couple other remedies that I've heard of, but pretty typically it's going to be deed the seller back on a title either with you or the seller goes back on title completely. You prepare an executory contract and there's a pre-signed warranty deed held with a servicer and the agreement goes the exact same way. You continue to pay it and that's it. This also outlines exactly what disclosures, or I'm sorry, what additional authorizations and the power of attorney that needs to be signed. So we're talking about authorization in favor of the buyer for the lender, for insurance, for HOA, change of address information, insurance proceeds authorization that authorizes any future proceeds from insurance to go to the buyer, not to the seller. And of course, that limited power of attorney. So this document section states everything that they're going to have to sign right before close of escrow. So it's a good time to talk about these and preface it by saying, hey, you're going to get this packet at close of escrow, and it's going to have all these documents in it, and here's how we use them. That's how we talk to the lender on your behalf after closing. That's how we talk to your insurance when we're changing insurance over after closing. So we need all these documents so we're not continuing to bother you in the future. These are your representations and warranties. It's basically just saying over and over again, the loan's not getting paid off. There is a due on sale clause, and basically you guys are going to cooperate with each other. There is a section in here that talks about bankruptcy. In the event that the seller files for bankruptcy, seller will reaffirm and execute any and all documents necessary to reaffirm the debt of the existing loans. In other words, don't include this house in your bankruptcy. If you want to outline this section specifically and talk about it, if you're concerned about it because your seller's mentioned bankruptcy, this is the section to talk about it in. And then we get into the good stuff. So once again, some of these feel kind of redundant from the seller acknowledgements, but I tell you, it's all for a reason. And the more disclosure you have, the better it is. This document alone says that the loan's not getting paid off about 5 or 6 times. So no one can come back to you and say, I didn't know the loan wasn't getting paid off. Well, you sure signed 6 different times saying you knew. So anyways, you've got no further ownership or control. In other words, you sold this house. It's the exact same if you were to sell the house and pay off the underlying loan. You don't have any ownership in it. The existing loans are not paid in full. There is a due on sale clause. You have continued liability on the existing loans because it's still in your name. This is a wraparound financing transaction. So if there is an issue with the buyer not paying, the seller may pursue foreclosure if the buyer fails to pay the existing loans. But the buyer's promising to pay it. But if they don't pay, the seller may pursue a foreclosure. The wraparound financing is non-recourse. So in other words, if the seller does pursue a foreclosure, there's not going to be any additional judgments against the buyer. So you're going to pursue foreclosure instead of pursue any additional judgments. Now, this section is one of those that I feel like savvy sellers don't want it in here. They're like, no, take that out. And this is a negotiable transaction, y'all. So it is what it is. And it also doesn't really mean anything. This doesn't hold any water. This says they're not going to pursue a judgment. Do you think it prevents them from actually not pursuing a judgment? No, it doesn't. It's just a little thing that they initialed next to it. Really doesn't prevent that. So be a good person. If someone wants this removed and you feel good about it and you know you're going to be able to perform on your end and you've given them all the instruments to be able to handle a default in the future if they needed to, you should be fine deleting this section. The wraparound financing is not due on sale. So this is in the instance where you want to sell the property. Maybe you want to wrap it. Maybe you want to sell it on a lease option, right? You're going to sell it. Then you want to make sure that your financing you're getting from them is not due on sale. So they can't call it due. If that's not going to be your situation, you can just delete this section. You no longer can deduct mortgage interest, seller. That 1098 at the end of the year is going to be mailed to me because I'm going to change my mailing information. It's going to be mailed to me. You can't do your deduction for that mortgage interest anymore. In the event of a foreclosure, the seller may be implicated. The existing loans on their credit report. If you have a VA seller, this is a big one, guys. Their eligibility may be impacted for future benefits and to get future loans. Property insurance proceeds, they should be going to the buyer after this point. And acknowledgement of disclosures. So this is pretty straightforward. They're very easy to read. The last document set that's in here is the full, my team likes to call this the notarized packet. This is the packet of documents that gets sent to the title company at close of escrow to have the seller sign. You're going to have to fill these in, or you're going to have the attorney or the closing attorney that's working on the file draft a power of attorney that's appropriate for them. This is just an example. This isn't perfect. Sometimes lenders don't like this one. Sometimes closing attorneys you're working with don't like it. Totally fine. Have them draft one that's appropriate for them. Not a big deal. This is one example of a limited power of attorney, and you can draft it and send it to the closing attorney and see if it's appropriate. These all get notarized, which is why it's called the notarized packet. This is the release of information. It's important to make sure the social security numbers get filled out. I did have a seller give me their fake social the other day, I think, and now I'm having trouble getting into their account. So this is one thing to think about. If there's a way to verify that that social is correct for them, maybe have title do it ahead of time. So this is something new that I'm just telling you as a tidbit. So you've got lender, loan number, social security number, and signature of the seller. That's important. And change request for address. A lot of these documents, you guys, you won't ever use, but it's good to have a secondary in case you ever get pushback or you do end up needing it. So these are just overkill. I promise you that. Assignment of insurance proceeds. Once again, if you've set up your insurance after closing appropriately, you won't probably need this, but it's good to have it in hand if you ever do need it in the future. Authorization to release information for the insurance. This is for the current policy. If there's forced insurance in place, this document's going to be not needed, right? Because the forced insurance in place is not going to have anything that you can do it with. It's the lender's policy. So the lender's not going to let you put your name on their forced insurance policy. So not only that, that's not how we really do this anymore. You don't go put your name on the policy with the seller. If you have questions about how to set up insurance, there's separate Zooms for that within the vault. This is the change request. This gives you some good information on what you're going to say when you change the policy. So if you did want to try and keep the same insurance in place, say there wasn't any other insurance available, you'd say, okay, I'm going to change this to a landlord policy and I want to be the primary. You're going to put the other person that was on here as an additional interest and keep the mortgagee in place, the same mortgage companies in place. You could do that. And you could use this document to try and do that. But it's not always workable. So just go to subtoinsurance.com and that should help you. Change request for the HOA. You could have this filled out if you have an HOA. If you don't have an HOA, of course, it's not necessary. So it's not completely appropriate to use every time. And on top of that, most of the time the HOA information gets transferred over with your closing, and escrow helps with that process. So there's all the documents in this folder. I hope this was super helpful. This is probably one of the most involved folders and the most used folders within this vault of documents. So I expect you to use this one often, and I hope this was helpful.